Let's just review that last transaction. That was the cost of sales, $400. That is the cost price of the stock which has now been sold. We have to take that into account. We had to reduce stock control by $400 because it has been reduced. We sold it. So $400 less, so credit entry, double entry rules. And the cost of sales, it's an expense. It's gone up by $400. So the debit entry, $400 there, matches the credit entry, $400 in the stock control account. Now this next transaction combines both the selling values and the cost values when there is a cash sale. This would be regarded as a reasonably difficult transaction. So let's apply the double entry accounting rules for this complex transaction, which of course excludes GST just for the moment. So the first part, cash sales of stock, $5,000. That means that your cash must have gone up by $5,000. So debit entry to the bank account. The cross-reference will be sales, and the amount will be $5,000. So there it is, debit entry to the bank to increase your cash assets. That's a debit. The credit goes to sales. Revenue is increased by a credit entry. So we put the date in, we put the cross-reference, and we put the value, which is $5,000. So there's the debit, $5,000. There's the credit, $5,000. The next part of the transaction is the cost of sales, $2,000. Cost of sales, $2,000. This is the cost price of the stock that's gone. So you go to your stock control account and you've got to reduce it because you've just sold stock. So you put the date, you write the same thing, cost of sales, and the value, which is $2,000. That has reduced the asset. Credit entry, double entry rules reduces the asset. And the corresponding debit is to cost of sales, which is an expense. Expenses are increased by debit entries as per the double entry rules. So we write stock control there, a bit of an abbreviation, $2,000. So there's the debit, cost of sales, that's the increase in the expense. And there's the credit that matches it, decrease in the asset, $2,000. The value of the debit, $2,000, equals the value of the credit, $2,000. So that one transaction included 4 separate entries in the ledger accounts. See the next section.